Welcome to today's Explainer. I'm your host, and we are diving straight into a totally fascinating company that's literally at the frontier of mental health treatment. We're talking about Psyence Biomedical, which trades on the Nasdaq under the ticker PBM. Today, we're doing a completely objective, comprehensive teardown of their operation. We're going to look under the hood at the data, the clinical pipeline, and the huge market forces shaping this really unique life sciences company. Our main goal? To break down exactly what they're building and why their nature-derived approach is turning so many heads in the biotech sector right now. To really understand why this company demands a closer look, you have to consider their current valuation. It's sitting right around $15 million. Now, in the biotech world, a market cap that low for a Nasdaq-listed clinical-stage company with active trials is, well, it's highly unusual. It frames a really compelling hidden gem investment thesis that we pulled directly from our source material today. It's a potentially massive, asymmetric opportunity for forward-looking investors. But, to see if that valuation actually makes sense, we need to dig into the details. Okay, here's our roadmap for today's due diligence. First, introducing Psyence Biomedical. Second, clinical progress and catalysts. Third, market opportunity and growth. Fourth, their financial position. And finally, the overall investment thesis and the risks. Section 1. Introducing Psyence Biomedical. Before we get into the science, we have to understand this specific, frankly devastating crisis they're trying to solve. Their medical niche is adjustment disorder and palliative care. When patients are faced with incurable cancer, they often experience this profound, debilitating anxiety and depression. It just crushes whatever quality of life they have left. And the problem is, traditional therapies, like your standard antidepressants, often fall completely short here. They take weeks to kick in, and the side effects can be brutal. So there is a critical unmet medical need. Psyence is stepping in to treat this with psychedelic-assisted psychotherapy, aiming for rapid, durable relief where traditional medicines just fail. Enter their lead candidate, NPX5. Now, let's be super clear. We aren't talking about some crude botanical mixture you'd find at a holistic retreat. This is a highly precise 25 milligram pharmaceutical-grade psilocybin formulation. It's delivered in these carefully measured 1 milligram and 5 milligram capsules manufactured strictly under good manufacturing practice, or GMP standards. But what makes NPX5 a real game changer is actually where it comes from. This brilliantly illustrates the company's protective moat. So on one side, you have the purely synthetic approaches that most competitors are using. On the other, you have Psyence's nature-derived botanical approach. They don't synthesize their psilocybin in a lab from scratch. They actually source it naturally. Thanks to their strategic investments in a facility called Psylabs, they've achieved full vertical integration. Psylabs handles all the GMP-compliant production, directly tied to ethical sourcing in Africa. This gives Psyence a massive edge in controlling their supply chain and offers a potentially much better safety and efficacy profile compared to purely synthetic alternatives. Section 2. Clinical progress and catalysts. The heart of literally any biotech investment is the pipeline, right? Right now, the core of Psyence's value proposition is their ongoing Phase IIb trial, and it is rigorously structured. We're looking at about 87 participants spread across 5 expanded sites over in Australia. It's a double-blind, randomized study, evaluating NPX5 in psilocybin-assisted psychotherapy. They are testing 2 therapeutic doses against a low-dose comparator. This is the absolute gold standard for clinical testing. It's designed to give us highly reliable, objective data on how well this nature-derived treatment actually works for patients dealing with adjustment disorder. Timing is absolutely everything in biotech, so let's walk through the roadmap for this trial. They've already nailed down ethics approval and finished their site expansions. The next massive milestone is patient dosing, which is set to begin in April 2026. From there, the timeline points to late 2026 for the release of top-line results. And guys, that late 2026 data readout is the major near-term catalyst. If that data comes back positive, it could dramatically re-rate the stock, open up regulatory fast tracks like FDA breakthrough therapy, and bring major partnerships right to their door. But hey, they aren't just a one-trick pony. Psyence is actively diversifying their pipeline by looking into ibogaine for substance use disorders, including alcohol addiction. Through Psylabs, they've already secured supply capabilities for ibogaine. And this is incredibly timely because we're seeing growing regulatory tailwinds in the US right now, including potential executive actions to push ibogaine research forward. It essentially gives the company a powerful second avenue for growth with huge implications for society. Section 3. Market opportunity and growth. Let's zoom out for a second to the macro scale. The sheer size of the projected growth here is just wild.
Right now, the global psychedelic drugs market is valued somewhere around $2 to $4 billion. But look at where it's headed for 2030 to 2032. We are talking projections of $5 to $10 billion or even more. That's a massive compound annual growth rate of 12 to 15%. Traditional pharmacotherapies are hitting a wall when it comes to efficacy, and global mental health spending is skyrocketing. This isn't just some passing trend. It's a fundamental paradigm shift in medicine.
So how exactly does science grab a slice of that multi-billion-dollar pie? Well, our sources outline 4 distinct growth drivers. Step 1 is, of course, clinical success, nailing that Phase IIb data to propel them into Phase III. Step 2 is their vertical integration edge. By controlling the GMP natural psilocybin supply, they ensure much better margins down the road. Step 3 relies on regulatory tailwinds, as global policies shift to create a much more research-friendly environment. And Step 4, big pharma M&A. As the massive pharmaceutical companies look to enter the psychedelic space, Science's de-risked assets could make them highly attractive targets for collaboration or even an outright acquisition. Section 4, financial position and valuation. Okay, pivoting from the macro hype straight into the hard financial data. And the setup here is genuinely interesting. Like we mentioned earlier, the market cap sits around $14 to $15 million, but their enterprise value is even lower, hovering right around $8 million. Why the gap? Because they actually hold a net cash position of several $1 million with absolutely zero debt. And that zero debt profile is absolutely crucial. It means their liquidity provides a solid runway to actually execute these clinical trials without the crushing weight of debt servicing hanging over their heads. Which brings us to a valuation metric that really stands out, the price-to-book ratio. Depending on the exact reporting figures you look at, Psyence trades at roughly 0.16 to 1.2 times its book value. To put that into perspective for you, the industry average for similar biotech peers is usually 2x, or honestly much higher. This super low ratio underscores a deep discount relative to the value of their underlying assets and cash. Book value essentially acts as a floor here, and positive clinical data is exactly the kind of thing that typically drives multiples up to 5x or 10x for advancing biotechs. Now, a quick reality check on their revenue model. Psyence is a standard pre-revenue clinical biotech company. They do not currently pay a dividend, and you shouldn't expect one. Every bit of capital they have is being aggressively deployed right back into high ROI clinical research, development, and manufacturing. And that's completely standard for a growth-oriented life sciences company. Near-term returns for investors are expected to come purely from capital appreciation driven by clinical milestones, not from quarterly payouts. Section 5, investment thesis and risks. Let's wrap this up with a totally impartial look at both sides of the coin, the tremendous upside and the stark realities of biotech investing. On the bull side, you've got near-term clinical data coming in 2026, their unique vertical integration moat, and a really deep valuation discount. But the risks? They're very real. Clinical trials can and often do fail. The company is completely pre-revenue, meaning they rely entirely on cash reserves and potential future funding to survive. And finally, trading as a microcap stock means you're going to see significant price volatility. You absolutely have to be prepared for sharp movements in either direction. Our source analysis hits the nail on the head with this quote: a rare combination, a de-risked clinical asset, vertical integration, and an extremely discounted valuation relative to its potential. It perfectly summarizes the asymmetric opportunity here. While the risks are standard for the biotech sector, this specific mix of natural sourcing, manufacturing control, and a rock-bottom valuation makes for a highly unique setup. Quick reminder before we finish up, this explainer is strictly for educational and informational purposes only. It is absolutely not investment advice. Investing in stocks inherently involves the risk of loss, and past performance is never a guarantee of future results. Especially when we're talking about pre-revenue clinical biotechs, you must do your own thorough due diligence and consult with a financial advisor before making any moves. So, here's the bottom line. The global mental health crisis is practically begging for innovation, and the underlying science is advancing incredibly fast, which leaves us with one really big question. Are nature-derived psychedelics the future of mental health investing? Let us know what you think in the comments. If you found this deep dive valuable, make sure to subscribe so you don't miss our next explainer on the market's most fascinating companies. Thanks so much for joining me. Invest wisely and stay informed.